Alright, the next thing we're going to do is we're going to do the closing entries and eventually the closing trial balance. So the very first thing that we're going to look at is we're going to prepare the actual closing entries, the journal entries. If you recall from our basic accounting model, assets plus liabilities plus owner's equity can be expanded in terms of including revenues, expenses, and withdrawals. To increase revenues, we would credit it. To increase expenses, debit. Withdrawals, debit. And these temporary accounts close out into owner's equity. So what we're going to do, first of all, let's recognize those temporary accounts in our ledger. Here's one, here's another, and one more. So we can see that revenue is at 130 credit balance. And the first things that we can do is we can debit revenues by $130 and credit a new temporary account called an income summary account, $130. We have two expense accounts to get out. They both currently have a $50 debit balance. Salary expense is a $50 debit balance. Gas supply expense has $5 expense debit balance. So to get rid of those, we need to credit them. So we have salary expense of $50 and gas supply expense of $5, and that's also going to come to income summary, which will be a $55 debit. This is our journal entry. Now what we need to do is we need to take the balance in the income summary, and one of the easiest ways to find the balance in the income summary is just simply create a real quick T account. So here we have income summary, has $130 credit and the $55 debit. That 55, 130, 75 credit balance. So in order to get rid of income summary, zero it out, we need to take income summary here of 75 debit and credit owner's equity, aka capital, 75. That's our journal entries. Let's go ahead and post closing entries to the ledger. So here we'll take 75, that'll close it out to 0. For our supplies, we can close it out here. 50 and the 5, since we already know that we did the 50 and the 5 right here as 55 under the income summary T account ledger. And then of course our revenue of 130, close it out right here. A debit to revenue, which means a credit to income summary. And then our last journal entry, we debited income summary, and then we credited capital. So let's go ahead and account for that in our ledger for capital. We need to credit capital by 75, making that 275. And then, once we've done our entries to our ledger, we prepare our after closing trial balance. We know that we zeroed out revenues. We zeroed out these two accounts. Capital now has a $275 balance. We don't need to include income summary because income summary was a temporary account that was closed out. And just to make this look a little neater, here's our closing trial balance, in which 1275 and 1275 equal to one another.